Fed President Powell has spoken today as the FOMC meeting just passed, and he was extremely bullish throughout his whole follow-up speech around our 25 basis point rate cut. Now, for those of you who are the new, you've seen it all over the news, you've seen it maybe in your emails and whatnot. Yes, we got another rate cut from our 50 basis points that we had that was aggressive back in September of 2024. All right, so just a couple of months ago. Now we have another 25 basis points, and the key thing about this is just following a euphoric move in the markets following President Trump-elect now ready to take the realm again. All right. So all that being said, what my goal is for today is to understand where we go from here. And then a lesson really is, how do you trade or invest in these overextended markets? Some questions I've been getting not only from clients and community members of mine is that, okay, is now the time to jump in? Is now the time to buy? Is now the time to get in? Right? Because it's now the retail investor, right, i.e. you and me, but more so the uneducated retail investor that just jumps in based off of news, is now riding this wave up higher, and it's pushing into a momentum wave. Now, intermediate experienced investors, traders, right, typically you're trading risk to reward, meaning the higher it goes, right, there's going to be a time when there is profit taking. No one knows when that is. But you want to make sure in these types of markets that are overextended that you're buying at the right time, buying low, selling high, riding higher, or being able to mitigate your risk. Meaning, if you are bullish and your long-term portfolio, everything's going great, and you're still riding the high, right? You may want to start de-risking yourself. That means potentially taking profits, right? Not telling you when to buy, hold, sell, do anything like that, but when to take your profits. And also maybe when to start hedging against your portfolio, right? Because at some point you want to buy the dip again, but some people out there, they may not have the cash flow or whatnot to buy any more dips. So they don't want to see their Palantirs at $60 come all the way back to 30. They don't want to see their Nvidia going to 160, then coming back to 120. Right, their Tesla at 300 coming back to 260 and 250. Right, you don't want to see those things for some folks. So you want to be mindful of how do you find the right time to get in. So all that being said, that is what's going to be the main objective today. Not going too deep into the rate cuts and things of that nature. Show some levels on SPY and QQQ and some of your main tickers that you're looking at, and get up out of here. All right, that being said, let's jump into it today. All right, this is sponsored by my community, Leverage University. All right, this is the community that I have, and also my coaching and consulting practice. If you don't know who I am, my name is Dr. B. I'm a holistic life and business coach and strategist for entrepreneurs and thought leaders. As you can see here, building businesses, discovering purpose, enhancing your life, and making money in the financial markets. All right, that is for you, and you sound like it would be something of interest to be a part of professionals, right? Thought leaders, people that have jobs, people that are entrepreneurs, people that are looking to better themselves. Would love to have you inside of this community. All right, so you can see here that we have some paid opportunities that gets you inside of the community, inside of the Discord. If you can see right here, where we have our trading floor, our coach's corner, finance, credit, our mentorship level for those one-on-one opportunities, our mastermind level. We do have some in-persons, typically once a year, and you can just chat in here if you're getting your fitness right, book clubs, all those good things. So we'd love to have you in here if you're looking for a community of like-minded individuals that are looking to grow and evolve in their personal life, business, finance, careers. All right, that being said, get that all out of the way. Let's look at our main objective here, which is this man Powell. Let me get myself out of this man's way, okay? We have our Fed meeting recap. Powell was extremely bullish, feeling good about our economy, says Trump cannot legally fire him. So when he was asked in the press conference, will he leave? No, he said no, and he said no again, all right? So that man is here to stay for right now. Apparently, his job is secured for at least 1 year through the first year of Trump being back in office. So we shall see how that relationship goes. Historically, Trump and Powell have not gotten along, but we will see if they will work together in unison in some type of way. All right. So that being said, a couple of key things. We had Pinterest reporting earnings. We had a couple of earnings that reported. A couple of them that may shock you. DraftKings pulled back pretty heavy as the betting industry has been very good, but it may have hit its inflection point. We did have Dutch Bros as well. If you have had Dutch Bros in your area, more specifically on the West Coast, it's moving to the East Coast. It is a huge opportunity, in my opinion, in the consumer space. very much competing, not yet as far as market cap, but taking up some market cap with Dunkin', right? Dunkin' Donuts and also Starbucks. So pay attention to Bros. It jumped from about $30 up to 50, and it's pulling back now. And I've got a couple others on the horizon. Bitcoin, of course, and crypto just euphoric right now. It is headed towards that $80,000 price target and ultimately to 100,000. So that being said, a lot of earnings that are passing up. On the horizon, so make sure you check those out. But the talk of the town is really just this euphoria that's going on, this continuous bullish nature for the past couple of days and ultimately this whole week after the election. Okay, so where do we go from here? All right, where do we go from here? As always, I like to check out the fear and greed index. We're sitting at 60 on fear and greed, right? It's pretty much in a healthy spot. We're not too much at extreme greed yet. There can be more push in the market potentially. If you see here on this timeline from the fear and greed index, right? Anytime we get close to fear, or excuse me, close to greed, there is an opportunity for us to hit that pullback button, right? Every time we get to greed, we hit that pullback button, right? Sometimes when we get to extreme greed, we can consolidate and sit up there for a while until some type of event or news or whatever, it could be an earnings report, pulls us back. So we're right back in a healthy, decent spot in greed where the market is in a good position and we're bullish and we're moving forward. So just be mindful of this fear and greed. Anytime we get in greed or extreme greed, that's maybe you may want to consider hedging, or the market can pull back essentially. For those that are beginners and don't know what hedging means, that means going against the opposition, okay? You're protecting yourself. So if you are long-term bullish, meaning going up in your markets, right, in your portfolios, you may want to hedge playing the downside. So either buying put options or either buying the inverse form of the SPY or QQQ, okay? So just if it comes down, you're balancing out your portfolio, right? And you're not selling anything. So that is an opportunity for people. Number one, as I get into these different ways that you can play these all-time highs, all right? So let's jump into the charts, and this will be a quick video, hopefully. All right, so one thing to notice here on the SPY is we've got a couple of trend lines here panning out. So SPY is approaching this top end of the trend line, approaching that euphoric number of 600, okay? So I've got this on watch here, and I extended this trend line when it was before right around here, and which we've technically broken. All right, it could still stay right here, so I'm going to keep that right there actually, right? Because it is right on the top of that line, okay? So these trend lines, they like to form back, forth, back, high, then came back, and then it's coming up to the top of the trend line again. So it may try to just breach out of it just slightly into 498 potentially, right, which is sitting right at 496 roughly. So it is getting to the top end of this trend line, but the market wants to do what it wants to do. So my whole objective of making this particular video and the educational piece of it is understanding that when people say, or investors say, or you hear someone talking about, is this a good time to buy in the markets? And you're hearing people say, not necessarily, right? Because what overextension typically means is that you have extreme bullish nature. Just look at, you want to buy low, sell high. You want to buy one in fear and then sell or consider hedging or taking profits in greed. All right. So anyone that gets too greedy in the market and starts chasing the market like this, right, pretty much gets knocked back down, right? They get slapped in the face at some point. Okay. This is essentially a momentum move. We have moved from 567 to 595, and that is okay, right? That is a normal bullish sentiment for the month of November. We've moved 5% in roughly 3 days, okay? So at some point, whether it happens tomorrow, Friday, November 8th, or whether it happens on Monday or sometime next week, right? Ideally, I think personally, here's my rationale why. And it could be irrational too of what happens tomorrow, but we're extremely overextended here on our relative strength index, meaning just slightly overbought, okay? Now, when we're in a bull market, it could stay up here in overbought levels. I mean, we'll look at NVIDIA, really quick. Nvidia has been at overbought levels. Okay, look at this monthly, just staying up here, overbought, on a higher time frame, right? So markets can just stay up here if they want to and just go euphoric, and it's called momentum, right? It's moving in a momentous way because there is extreme bullish nature. So the opportunity with this is that yes, like everything's going in one direction. But however, when you're trading risk to reward or you're looking at risk to reward, that's all the markets are, is managing risk. So essentially, the higher it gets, how much more are you trying to squeeze out? It's like, I just want an extra dollar, an extra $2, an extra $3. So you're risking $2 to $3 for the potential to lose $4, $5, $6. That's not a good risk to reward, right? So the higher things get, the more kind of stand back offish or profit taking or put options are placed in these particular stocks that are potentially overextended. That's what that means. And a lot of times you won't know what overextended means until you either look at number one, fear and greed, and also you understand the charts. And when I'm looking at the charts more specifically, I'm typically looking at how massive of a move we have made in a short period of time, okay? And it starts to approach very specific psychological levels. So that means stocks like to move to round even numbers typically. It wants to go from 500 to 550, 550 to 560, 560 to 570. You get the gist. And now it's going to that round even, or trying to get to that psychological level of 600. Okay, so if I put a big level here, right, everybody's trying to join this 600 club. Okay, every bull, everyone that's riding high is like, okay, come on, give me 600, give me 600. Very similar to Tesla. Okay, very similar. Man, how many people have been trying to get Tesla over 300 for how long, right? Back in 2023 July. So we're talking about a year and a half of trying to get Tesla back over 300. So they're going to try their darndest to push this thing over 300, but they're also sellers sitting right there because they know, okay, we're going to try to protect this level again. Right there, right there, right there. Big push down from 299, gap down all the way back to 260 very quickly. I think that happened, daily? Overnight, right? So from 299 back to 260 overnight, when people were just getting ready to push it up to that 300 level. Now, this is a different type of candle, close to 300 versus this type of bullish candle approaching 300. Okay? There's a difference in the type of candle. You see how bullish this candle is versus the other one had more of a bearish sentiment or selling sentiment, as it was red and had some top heaviness to it. Okay? So that being said, I'm going to wrap this video up with a couple levels on QQQ and IWM, but my big takeaway was really just identifying on SPY that your risk looks like this, okay? If you are trying to take this up to 600 and you enter right here, okay, this is all your risk potential down here. So if you enter a call or enter shares or whatever right here at 596, and you're like, oh man, another day of bullishness, and it goes up and it gets to 597, gets knocked back down and comes all the way potentially back to 591, then you're like, oh my gosh, so that is, every investor, in my opinion, that has started has experienced this, where if you don't understand how to trade or invest at high levels, right, then you have to understand, either sit back, wait for the pullback, or you take some low risk, or you take some opportunities to trade puts against this for the opportunity for risk to reward. If you lose, or you have to stop out, you know that, man, I can control my risk, because here's how puts or trading against this market potentially looks, right? Do you see the difference? Is that if it approaches higher up here, that's what my risk looks like, right? About $1, $1.50, $2 risk to potentially make, potentially $8 to $10 on this move. You see the difference from a visual. all this green if I'm playing the downside puts, and then if I'm playing the upside, it's more red, and it's, all the red to the bottom. So that's the difference of playing all-time highs, okay? So just be very mindful if you've had multiple green days, ride the high, but start moving your stop losses or start protecting your profits, trimming some gains, right? Or just hold it and say, I'm not selling nothing, not selling anything. I'm just going to buy it when it comes lower. Cool. Then be ready for that, right? So these gaps will get filled. This gray area here, this gray area here will get filled. That means at some point, whether it happens in the next day, 2 days, week, 1 month, 2 months, whatever, this is getting filled. It's coming back like that, okay? So that is the chart reading to understand that these gaps will get filled at some point, and SPY will be back at 565, 567 at some point yet again, okay? So those are the dips that you want to be ready for, is when out of nowhere you're like, why is it red? This is why, all right? So you'll know and you'll be prepared for those, all right? QQQ, NASDAQ, we've broken out all-time highs. You're talking about euphoric again, okay? So what does that mean? That means, again, it looks very similar to SPY, pushing up in this 515 psychological level, and we're rounding out here, and we'll get these levels here, and I'll be out of your hair. 515, and we're coming back down, potentially, if we stay below 515, to come back down to this 508, 507, and there are some gaps below again. Okay, you can see there it's very similar to SPY. The QQQ was a little bit stronger, so we're going to roll over here potentially, and we could do this tomorrow. We could do this Monday, Tuesday, same sentiment. So the more the more bullish you get, you may want to just sit back and relax if you're not comfortable playing puts, or take the momentum trade. If you're a momentum trader, I've been teaching my clients that's great. I give both opportunities for anyone to trade. However, I trade personally risk to reward. That means if it's at an overextended level or close to resistance, I'm going to consider puts, right? If it's falling into support, I'm not going to chase puts down. I'm going to consider waiting for it to get to support, ride calls back up. So the more that it pushes up like this is just momentum. Okay, market opens, jump in calls, right? And there are a lot of traders that do that. They look for break of pre-market high. So if it broke above 509, cool, I can take it quickly up to 510. But a lot of people are looking at this 510 level today, and it just absolutely broke through 510, right? So that was one of the trades that I personally took today, where I was looking at this 512 area to pull back to 510 and maybe come back down to 507, 508, and it just did not do it, right? So I was cool with that. I did swing a little bit of a put, so we'll see how that pans out in the morning. If we get one of those big falls and gives it all the way back, that'd be awesome. But hey, it is what it is. This trade for me personally has been working very nicely. If you know, you know. So those are the levels on SPY. IWM really quickly. Small caps were slightly weak here. It may be a little bit of a head and shoulders potentially. That is more of a bearish sentiment in the short term. We could get that fall tomorrow and pull back to that 230 level. There is a gap on IWM as well, so pay attention to that. Could look at IWM is falling just slightly weak back into this 230 and 227. NVIDIA trying to get to 150. No reason to belabor that point. It's got earnings in a couple of weeks. Just look out for 150 as resistance. Google, amazing move from 169. I mentioned that in the community, and it just absolutely took off without us, unfortunately. So I need to find a re-entry on my Google entry long for calls. And then 182, watching that level as resistance as a double top here and slightly pull back to 177. If we get back below 177, then we could fall even lower there if the market prohibits that. Microsoft right in resistance at this 427. You can kind of see a little bit of wicking right here at the top, some sellers stepping in at 427. So watch that for a pullback into that 421 level. Okay, AMD made a nice run. The semiconductors are picking up a little bit with NVIDIA on the rise. AMD, maybe pay attention to this. I mean, it was lagging a little bit, concerning. Maybe a little bit of a pullback. If we can get it back to 145, take a bounce there. Or it may just continue. Gets above 151 again. reclaims that, it could go back into that gap fill back up to 160. Okay. Apple went over that. Tesla talked about that. Be mindful of this 300 level. Don't jump the gun too early on this 300. There might be sellers waiting for that level to short it again right at this, right underneath 300. So do I get trapped there? If it breaks above 300 solidly, you could take that up. And I think the next level personally is 305, 310, 315. Meta, same thing. Wants to retest the 600 levels, looks extremely bullish. We need some help from the market if that continues. But again, we've got some overhead levels that are stepping back in, just under 600. Some sellers stepping back in right here, 597, 597, 597. All right. Amazon, euphoric. This is my last one here. Okay. Can't really trade anything up here. Need a pullback. If it double tops or it starts to fade, look back down towards this 205 level. Below 205, look for 201 and 200. All right. Thank y'all so much. Peace, love, and blessings to you. Make sure you protect your account and risk management ultimately at these all-time high levels. The market is extremely bullish, extremely euphoric. Wait for your pullback opportunities and take it long for your shares and call opportunities moving forward into the end of this bullish November month and December and for the remainder of 2024. With that being said, don't forget to smash that like button, hit the subscribe button, hit those notifications, join Leverage University, and I'll see you all in the next video. Peace.